Hey, Tom here, FlipAnythingUSA. So I thought it was interesting. I saw this clip. I didn't watch the whole thing yet, but just the title alone. It was newly built homes sales fall to pre-pandemic lows, and this is not unexpected with the interest rates going up. This is kind of the correction that, this is what they're trying to do. They're trying to bring prices down, curb inflation, and it works. And I'm kind of glad for it. I'm hoping it starts catching on to the commercial properties, which I'll talk about that too in a few minutes. For those of you, if you're first time here, my name's Tom McKay. I've been investing in real estate for 41 years, and I've made tens of millions of doing it. Made my first million when I was 28 years old, and that was a long time ago. And I've got a book, Wake Up and Smell the Real Estate. It's a bestseller on Amazon, Kindle. You can get it on Audible as well, and it'd be the best $10-20 you ever spend. I promise you that. But it's interesting what's going on, and to see this is one of the harder crashes probably going to be coming. I haven't seen one really in a while. I didn't consider '09 so bad compared to what I've seen in the past. When I started, interest rates were coming down from like 14-15%. In fact, first properties that I purchased, they financed at 10%. People think, things can't get any higher than this. Everything's going to collapse. No, they won't. Everything's will be fine. But prices will take it and take a hit. And I kind of look forward to it to a degree. And we'll get into it.
It's the best thing I ever did.
So I'll go ahead and get this thing going, and let's see. Let's see who all's here. Anybody got anything to say? How you feel about the market? Hey, Russ, glad you're in here. It was nice catching up with you the other day. And so this is, let me just show you something here in Google Earth, because I'm going back to like 1980, 1982 or something like that. And so look at this. This is an area in California where I was working. And this is kind of the stuff that happens is, like, just say when this was a new track, and I'm using this as an example, but when this was a new track in the 80s, they'd have like the first phase selling for like $100,000, and then the second phase, for $150,000. And then, things keep rolling. And then the third phase, would be like, 150, say 185 or something like that. But then trouble hits. The market starts to get shaky, starts to get rocky. People start losing jobs. Interest rate goes up, and or doesn't, it just starts getting thin. In this particular area, there's a lot of layoffs related to aircraft and that sort of thing. But so what the killer is this, and this is what's happening, or it's going to start happening more around the country. You're going to see the first phase, say whatever it sells for, 200 or 300, whatever it is. In the second phase sells for a little more. Then you get to the third phase, and then trouble starts to hit. And even though they started out selling for more than the second phase, what they quickly do is, these are the builders. They've already got 3/4 of their project paid for. They start lowering their price, and then the next thing you know, they're competing with the phase that they just sold, like the second phase. If this was the first, this is the second, this is the third phase. All of a sudden, they drop their prices, and now they're, these guys were all feeling good. This guy's feeling great. Hey, they're selling the second phase for $50,000 more than the first, and then the third phase they're selling for $75,000 more than I paid for my house. And then all of a sudden, these guys start going, we got to correct things, and then next thing you know, these people are going, hey, that's not fair. They're selling their property, these brand new homes, for less than we just paid for ours. And that's the problem. Then these people are the first ones to feel stuck. They feel stuck because the third phase is selling for the same price as theirs, and they're brand new, And then the next thing you know, they keep falling. And if these guys don't get out, pretty soon they end up in the same boat. And now you've got the builder competing with the first phase that they sold 3 years earlier, because see, he can sell it for less. So now he's selling it for less than these guys way back here in the first phase. Now we got some inflation to help these guys out a little bit, so it's a little more expensive here to be building here 3 years than from maybe this one was, before the pandemic. But the bottom line is the developers of the tract become the most hated enemy of the people that bought in the first and second and even the third phase, because these guys are like, they might have 20 houses framed, like, gee, what do we do? And they're like, you know what? Let's just finish it, because you can't leave a tract of homes framed. You can't leave them that open that long. The city will make you bulldoze it if you don't finish them. So, hey, if you just got here, please hit that like button, hit that subscribe button. Just takes a second. Try to give you all the information I possibly can to help you from my experience, and you could reciprocate by just hitting that button. Helps the channel a lot. So that's what I foresee. So now let's go ahead and watch this clip that was on CNBC, and let's just see what they're talking about, and we can chat about that.
Sales of newly built homes have plummeted to pre-pandemic levels as inflation and mortgage rates rise. According to the U.S. Census, sales in April dropped 16.6% from March. The census also notes sales were down nearly 27% from the same time last year.
So
the inventory of newly built homes on the market shot up to a 9-month supply. Normally, there's a 6-month supply. The sales numbers are far below what forecasters expected, prompting more recession fears.
So I don't know if you caught that, but they said that the prices dropped 16%, and then I think that they said that the sales, where they had what they considered a 6-month inventory was now considered a 9-month inventory. So that's 50% again. Delay in sales time, and it's probably just going to get worse.
Joining us now to untangle all of this is Danielle Hale. Danielle is the chief economist for Realtor.com, one of the web's largest realty sites. Danielle, thanks for being with us. What is going on here?
The housing market is adjusting, and it's adjusting in a big way. We've seen mortgage rates increase roughly 2 percentage points since the end of the year last year, and as a result, housing is much more expensive. Buyers are having to grapple with higher costs of housing, while at the same time, they're navigating higher prices for things like gas and groceries and childcare. And at the end of the day, some buyers are taking a step back and reassessing their options because the costs are just too much. That's why we're seeing some weakness in those new home sales numbers and in other sales numbers across the housing industry.
All right, let's circle back.
So yeah, we've got some different things going on here that we really haven't had in the past. Like I say, the inflation. Just things are just getting so crazy expensive. I've got air conditioners that used to be $4,200. They're $9,000 now. It's a big hit. And for those of you who don't know what's coming, listen, you got to watch out for this. A lot of AC guys might not even tell you this because they don't want to discourage you from buying a new unit. But supposedly, they're going to be making the SEER level. They have these, SEER ratings on ACs, 21 SEER, 22 SEER, different ratings. They have to do it on tractors. They're doing all kinds of stuff for different reasons. But the scare is this, they're going to have a new AC SEER level coming out this next year, which is basically then going to take everything that's been done before that and kind of make it obsolete, and it's going to make I can't even think of it at the top of my head now. The stuff that they fill the tanks with. I just had this done. Anyhow, somebody help me there. What do we put in the ACs? What do we fill them with? I do it all the time. In fact, I just had ACs that cost me $900 just to get the AC recharged. And, this is and it's only because every year they try to, or almost every year, they make the ratings higher for economy and for, this, that, and efficiency. And so the previous stuff that they charge the ACs with, Freon, thank you. The Freon becomes different. You can't use the same Freon in every year. And so they have different levels and different ratings, and then they even have some that you can't even get anymore. I remember buying a crate of tanks just so I could keep charging the units that I had that were so much older. And so as a result, I had to pay $900 for a charge that normally would have been maybe $200 with a Freon. And my AC guy, who's been doing my work for 20, 30 years, he told me, he says, "Hey man, they're not talking about it because this is what's coming. They're gonna jack that rating up. And you're gonna, whatever you buy today, next year it's going to be, it's like it becomes obsolete, just like a computer, right? They come up with a new chip, and you're looking there sadly at your computer because it's not near as fast as the one that just came out a month after you bought yours. Well, that's kind of how this is, and that's coming. And so if you got those ACs out there, you might as well stretch the life out of them until it's clear next year as to whether or not you're going to have to replace them or not, or if they're going to change that SEER rating and make everything that you bought, just terrible. It's like buying an AC, and then next year, all of a sudden, the AC you just bought 6 months before, it might as well be 20 years old, because that's how they're going to treat it. So anyways, back to this. Let's go ahead and watch a little more of this, and we'll pick up the conversation.
On mortgage rates, just a little bit. I guess we have mortgage rates now above 5%. That is quite a hike over the past months and years. What options does that present for consumers? Any?
Well, whether you think 5% rates are high or not probably depends on your perspective. They are the highest rates that we've seen in the last 13 years. And so anyone who's shopped for a home in the last decade or so, this is going to be the highest mortgage rate that they've seen.
Okay, so you guys know that I buy industrial, commercial properties. I also buy a lot of houses. I make a lot of money flipping houses. I've been doing this for a very long time. Right now, everybody's complaint has been that there's so many cash buyers, investors like me that just come in there and pay cash and can close it in a few days. Kind of ruins it for that that aspiring new couple that wants to have the American dream and have a home, and so they get blown out. Guys like me buy it, fix it up, and then we put it back on the market. We just sell it for more, so it doesn't really hurt the market. We're just making some money on it. Well, with what's going on, even though the interest rates have gone up, there's still so many cash buyers like me and so many others. There's what I call stupid cash. There's a lot of stupid cash in the country. That's one of the reasons we haven't seen the commercial properties values go down, is because not everybody's so dependent on the bank to borrow money from the bank. And like somebody noticed here, how would they say, 10th grade dropout wrote, by the way, here in Dallas-Fort Worth, prices are still going to the moon. Well, I got the same thing going on in Austin, different areas where I invest. And it's because there's still so much cash here, and there's jobs here. People come here, and that's one of the things that'll, like I say, and I tell everybody in my mentorship, what happens, your economy is kind of what happens in your area. Just because things can be going to crap in different areas in different states, and your place is still on fire, and just going to the moon with prices. Well, that's kind of what we got here, because we have a lot of jobs. We have Tesla, we have different things coming out here that other people don't have, and that is kind of typical of a lot of different places that have certain things going, a good place to live. A lot of people have been fleeing New York and going to, and leaving California. They're going to Vegas, they're going to Phoenix, they're going to Austin, they're going to Prescott, they're going to Florida because they're getting away from the taxes, the stupid government taxes. They just treating everybody like they should be milked. That's what you feel like. You feel like a cow being milked, right? With some of these taxes, and these states are just really greedy, and they make it worse. So, anyways, let's keep watching, and we'll chat some more about this.
For shoppers who bought homes in the decades before that, 5.25% rates are really not that bad. So a lot of it depends on your perspective.
Agreed.
The key thing to note is that these higher rates are coming at a time where we are also seeing higher home prices because we don't have enough homes available for sale relative to the number of buyers who want to buy them. And high prices and the combination of higher mortgage rates have really increased monthly costs. Monthly costs for new homes are roughly 50% higher than they were this time last year because of that combination of higher prices and higher mortgage rates. And if you look at what builders are building, they're really struggling to build in those low entry-level affordable price.
So actually, I saw Russ who's in my class. He's in here in the chat too, and he mentioned in class the other day how he's also a realtor, has a brokerage and agents working for him and stuff. And he was saying that the tenant that would have or the buyer that would have qualified for a $625 or $625,000 house today, now they only qualify for like 550, and it's gone up a little bit since then. So people don't quite qualify for, but as you know, most of these sales, a lot of sales have been cash, and the prices have been so high. We've had to do appraisal waivers and everything else because the houses are selling for well over the appraised amount. Which, interesting enough, I'm going to bring up something just a little bit unrelated, but this is kind of interesting, is I heard there was a city, it might have been in Texas, that in order to, of course, the city council, they wanted to ban investors from buying real estate. Maybe it was even a program being pitched on a federal. They keep investors from buying so that, other people could afford it, right? So they're going to damage the market so that other people can buy it. But really, if they really wanted to correct that, the best way would be to just simply make it so that no house can close sooner than 30 days. And the reason why, if you make it so that, that every house has to take 30 days to close, it would make it easier for people to compete against cash, because cash, right, is right now. I mean, I use it all the time. Here, I'll pay cash. I'll close it in 3 days. I'll close it in 1 day. If you can get it ready, if you can have it closed, I'll close it in 1 day. But that won't carry much weight if there's a mandatory 30 days, because then that cute little couple that's struggling and borrowing a little money from dad, mom, or whatever, and putting it down, they'll have it qualified and they'll have it funded within 30 days. Anyways, just a thought on it. It's just something I just heard. So let's keep watching.
Points. Roughly 1 in 10 homes in the recent data was sold under that $300,000 price point, compared to 1 in 4 homes 1 year ago. So we're really seeing a big shift in what's available for sale, and it's not geared towards affordable levels right now.
All right. So in many communities around the country, even while people were sort of processing strong headwinds of the economy, various data points, the one thing people seem to be holding on to was this sense of my home's at least holding its value. My home's worth something. Now that you see these numbers and expected price challenges, let's call them, can we see this as a further sign of a imminent recession?
I think it does increase the likelihood as rates go higher, as the Fed tries to normalize policy. It does increase the odds of a recession. It's certainly not their goal. They're working very hard to adjust rates higher, to tame demand without sparking a recession, but it does increase the likelihood. Now, what would that mean for potential consumers in the housing market? It could mean a slower pace of home sales.
Has anybody noticed if there's been any drop in the cost of lumber? Because that would also be an indication. Right now, everybody gets a premium for all their products right now because the demand is so high. But if the demand is slowing, then we may just start to see the cost of materials go down, which I would welcome because I do a lot of remodeling, a lot of rehab. But so I just wondered, maybe Liam, have you seen anything? Have you noticed lumber gone down some? I thought I heard the uneducated economist talk about it. He works in a lumber outfit, and I think I saw a headline talking about values dropping, a little bit of cost dropping. I hadn't seen much drop because I'm in an area that's still just booming busy. But I just wondered if anybody's noticed if they've seen any fall in cost of materials on anything.
It's very likely to mean a slower pace of home price growth because of the higher rates and perhaps because of any implications for the jobs market if we were to see a recession come. So I think with those uncertainties swirling right now, it's really important for consumers to be prepared and focus on themselves and their budgets when they're getting into the housing market, making sure that they're on good financial footing so they're setting themselves up for the best possible outcome when they're buying a home and getting into the market.
Okay. Danielle Hale, Chief Economist with Realtor.com. Thanks very much for your insight. We appreciate it.
People want to know the differences.
Yeah, that was actually some good advice she gave there at the end. And I tell everybody, a buddy of mine used to race motocross.
Good evening and welcome to Tucker
He always
Carlson's on Happy Monday. Things are changing fast as.
Sorry. Anyways, a buddy of mine that used to race motocross, he always says, dress for the crash, right? Dress for the crash. Meaning, you wear all these leathers and boots and things, and you're just getting ready, just in case you have a crash. You're prepared for it, and that's kind of what everybody should do right now is, you want to be able to handle it if you lose your job. You want to be able to handle it. You got to be careful as to overextending when you're going into uncertain times. I'm really very pleased right now because there's really nothing I care to sell right now. I've got plenty of lines of credit and cash. So I'm just going to be pickier about what I want to buy, what I can buy. I don't have anything under contract. I haven't anything under contract for like over 2 months, which is unusual for me. I have something always under contract, something I'm always buying. But I've been watching carefully on the commercial properties that I like, and I think I'm starting to see a little greater cap rate. And, I was talking about earlier about the stupid money out there. There's so many people with 1031 money that, in other words, there's just an abundance of cash in this particular area, anyways, where I'm at, that, even though the interest rate's gone up on the money we borrow, normally you'd see the cap rate would grow. Because, if you borrow 3/4 of the money, you're not going to make near as much on a property. But I hadn't seen that change much. So Fiberton wrote, lumber is falling. So that's interesting. It was the closest random length of lumber. 3 months ago it was 1464. Oh, that's interesting. It's still quite a spread. Liam wrote, this lady just said there's not enough house to buy, and the guy before her said there's a surplus of new house on the market. I didn't catch that. So what are you suggesting if you have the cash? Hold on. Bishop, you got to do what's good for you. I mean, I'm very reluctant. I mean, it's just always safe. I am not afraid to buy. I'm still buying property. I'm looking, which means if I'm looking means when I see something, I'll buy it. But everything I buy based on today's values. If I feel that they've dropped some, my price is going to go down. Anything I buy, there's always going to be a margin where I can get out and I can sell. I don't feel like I need to dump. But again, I live in Austin, Texas. I live where Tesla is. I live where, they're expanding other plants and other things, a lot of high tech workers, in as much as what brought me to Austin originally was, it was just the highest educated city, I think, in the USA. Highest, more bookstores per capita than any other city. And it was really an odd situation when I first came here. It's one of the things that brought me here is that it was the top 10 best places to live. And it was also the top 10 cheapest places to live, which is really unusual, right? Imagine the best place is also the cheapest place to rent. And it was because they were wiped out in real estate here a long time ago. Hey, German, glad to see you in here. Mark Ramos, what's your opinion on where rentals are going with the mortgage rates? I'll tell you, the tax assessor doesn't seem to care that we're going into maybe a little bit of a recession. They don't care that we've been in a pandemic and that business have been shook to the bone because they're still recovering. And so, as a commercial landlord, when they raise my taxes, I have to pass it through to my tenants. Now, I fight taxes all the time. I'm actually suing a couple of counties right now to get the tax bills down because, they're just, these people could never make it in the real world. They're terrible at their job. It's just a hard situation, and I can't even pass all the tax burden on to my tenants because it'll crush them. Some of them it'll put out of business, and but we're kind of all in it together at that point. But I don't know if that answers your question, but I'll tell you, listen to this. I got a text this morning from a guy. Let me see. And so I had one of my tenants was complaining that I raised his rent $500 a month, and I didn't like doing it, but I'm not making anything. I'm just basically passing the tax burden on to him and some of the other adjustments of costs that have gone up on me. Well, at the same time, he's got $500 more a month on a $5,000 a month rental. And then I've got another guy writing me saying, hey, Tom, he goes, do you got any houses? He goes, they just raised my rent $500 on his apartment. So his apartment went from $1,300 to $1,800. Now, $500 is a significant amount of money, but if when you're putting it on a commercial building that's 5,000, it's 10%. But when you're talking about, $500 on a $1,300 rent, that's a really hard hit. That's like a 40% jump in your rent. So I don't know. What do you guys see out there? What do you think? I know some of you guys got rentals. It can make you nervous. Some of you might feel the need to jump and sell, and a lot of people panic in these times too. That's kind of one of the things I'm kind of waiting for more than anything, is people panic, they get scared. They jump and they maybe sell things too cheap. That happens. So I'm kind of looking forward to some panic selling, to be honest. Hopefully it's panic selling, not necessarily something that is real. But that's the thing. And I've got a chapter in my book. If you don't have my book, Wake Up and Smell the Real Estate, called Leapfrogging, and it's something that may be appropriate for some of you out there. And basically, leapfrogging is just simply jumping ahead of what's to come. If you see that the values are going up, if you can feel good about it, or even if you're in a bid situation, then I do it. I leapfrog, and I'll pay more than everybody else to blow everybody out of the water and get the thing closed. But likewise, when I'm trying to sell something, if things are trending down, then I might kind of go the other way. Like, I'll just cut the price $50,000. If I think it's going to be $50,000 less than 3 months, I'll just go ahead and take $50,000 now off the price that I'm asking in order to be the cheapest thing on the market and get rid of my property, because I know everybody just takes turns taking $10,000 off, and then they all just kind of ride the same stairs, at the same pace, and it's not a good thing. So 10th grade, his thoughts are right now is the time to hoard cash. Deals were appearing. I know I'm not the only thing I know for sure is I don't know for sure, just depends on where you're at, and I don't know where you're from, 10th grader, but where are you from? Because it may be true where you're at, but it's not the same for everybody. I've been in parts of, I've been investing, making great money on real estate in one area of the country, and then going into another area that's devastated, and I'm buying stuff. I feel like I'm picking through the bones of these people, buying stuff so cheap. So it's different. It's just different in different areas. So you really can't say this is what it is for the USA. So Peter Bedford, he said, I've leapfrogged on the upside, worked well, might try it on the downside. Yeah. Well, I can tell you right now, if you have something that you want to sell, just sell it. Just get rid of it now, because I don't think you're in it would be quite optimistic to think things are going to continue to go up in value. And I think it's certainly fair to say that things have leveled off, and it's not, it's not unfair to consider that maybe things will go down, because things have just skyrocketed up very rapidly. So it would just be prudent to go ahead and consider. Okay, so see, 10th grade dropout. He's in Texas. Texas is one of the areas that's flourishing. Also, Phoenix is flourishing, as well as Orlando. In fact, Phoenix, by the way, just Phoenix, Orlando, and Austin, those are all projected to be, and I'm not much of a speculator, you guys know that, but they've got the right tax policy, and people are moving into those areas, and so they are kind of ripe for growth, I would say. So you got some safety there. But hey, if you just got here, please hit that subscribe button, hit that like button. But I really could use some subscribers. We're actually starting to grow again. I appreciate you guys jumping on there, and try to deliver the best content I can and give you stuff that's relevant and real. I've got 165,000 square feet of rentals myself, and I kind of take everybody into those purchases. I've bought many of these properties in the last 5 years and sold some too. There's just nothing better than real estate. There's no other vehicle that'll make you wealthy like that. And I got people that are here in my mentorship. In a couple of years, they've made, some of them multi-millions. But everybody has more money, more cash, more equity today than when they started, and that's a beautiful thing. So let's see. Marco wrote, rents on Long Island right now are high, seeing 35% increases in small and 10-unit. Yeah, I know it. Yeah, Liam, that's his area, right? And he's killed it. Liam's actually made some real great money out there, and he's still feeling good about his area, and he's still in a high tax area. But people still, people live, listen, people live in the ghetto that don't have to. And the things that keep them there are family and all the different things that keep us where we all stay, right? I'm looking for a second home in Florida right now. I wanna. In fact, I'm going to Florida here in about a week, and I'd like a Florida home for the winter, and I would like another California home maybe for the summer because it's a little too hot where I'm at. But I'm glad you're feeling good about it, Liam. I do too. I'm comfortable. Like I said, I don't have anything pressing me, and that's the best place to be. And those of you out there, you gotta, like I say, dress for the crash, right? Think seriously about what kind of peril you can be in. There's nothing worse than all of a sudden a little change happens, and all of a sudden you're going, oh man, I'm in deep shit, and that does happen. And so, but once if that happens to you enough times, like it has me, I learn from it, and I'm always looking out for it. But anyways, and by the way, we got our class tomorrow. Maybe we'll do a live Zoom on YouTube. And those of you that interested, I have a free webinar. I just send it to you. It's just a video. Just go to the links below and sign up for the free webinar. And no pressure. But also, by the way, I'm closing it. I have the 1 year mentorship is over. There's only 3 days left, and I'm not committing myself to a year of mentoring anymore. So those of you that want to get in there, this is you got 3 days left, and that's it. And then the price will double if I even consider doing it anymore. But I'll continue the mentor, but I'm not going to do any more 12-month commitments. So that's it on that. And hey, hit that like and subscribe, and we'll see you all later.